Welcome back to Accounting for Creatives. Today we're going to talk about investments. What are actually investments? I told you before that purchases can be divided in two groups: costs and investments. Costs are these purchases that directly affect your equity and your profit. But on the other hand, investments do not. Investments are purchases over 450 euros. This is a Dutch limit. And they last at least more than 1 year. So they go over the 1st of January to the next year. And we don't consider them cost right away because we change like money for something valuable for the same price. So our assets are kind of keeping the same amount. It just changes within the assets, the form changes. So let's have some examples. A company car. If you buy a car, it costs a lot of money and it's not immediately affecting your profit. While you use the car, of course, it will create costs, but just the purchase will not affect the balance sheet equity amount. You can talk about office furniture, musical instruments, and even computers and software. Things that last long and will cost more than 450 euros. Let's go back to the purchase. Let's go back to a purchase and we kind of buy something, for example a decor, a set, and this set will cost about 4,000 euros. This is an amount of money that is not paid for just 1 month or 2 months. We intend to do several years with this set. Of course we have to pay VAT, and it's 21%, so on top of this 4,000 euros we have to pay 840 euros VAT. But this amount we know we will get in return within 1 or 2 months from the tax authorities, so that's not really a problem. It's more that we have to pay it now and get it back later. But how do we kind of put this in our balance sheet, in our journal? Well, we have this special ledger account called investments, and it can be investments in general, or in this case we also could decide to call it sets or inventory or something similar. But I choose investments, and it's for the amount of 4,000 euro, the purchase excluding VAT. Of course we have to book also the VAT receivable, 840 euros, also on the debit side, because the claim on the tax authorities is increasing. And finally we paid it by bank with a debit card, so it's immediately paid, it's a cash payment, and the bank is decreased with 4,840 euros. So bank is normally on debit side, so we put it on the credit side in the journal entry because it's decreasing. Important part of this is that the investment is increased with this 4,000 euros and that no cost ledger account is being used because we did not touch the equity at this moment. But of course, if you do an investment, you still will have cost eventually, but it's just not at the moment of purchase. Once we are gonna use the investment for a few period of time, then costs will occur and we will have to calculate what these costs will be. So we start with some estimations. We estimate the purchase will last for about 4 years. That's just something we think of on the beginning. We will estimate also that the residual value after 4 years will be about 400 euros. That's just a guess, but a well calculated guess. So how can we calculate the costs that we will have to book every month in order to create the realistic way of the cost of this purchase? Well, first we are gonna calculate the depreciation of this investment of this set in the 4 years that we will be using it. So 4,000 is the purchase price, 400 will be the residual value. If you subtract these from each other, it's left over 3,600 euros to depreciate it in the period of 4 years. Well, if you divide this by 4, then we have the depreciation for each year. So the annual depreciation will be 3,600 divided by 4 comes to 900 euros every year. So this is the amount we'll be using every year to as cost for using of this set, this investment. If you wanted to have it monthly calculated, then you can just divide it by 12, and then 75 euros each month will be your depreciation for the use of this set. So this is how we get these numbers. In Dutch we call depreciation afschrijving, which means like assets that's going down in value. Okay, so depreciation will be the cost of the investments we did before. Every month we'll have to tell our bookkeeping that this investment has lost a little bit of its value. And we do this by booking this depreciation costs into our bookkeeping, in our journal entries. So we have this cost-related ledger account called depreciation costs. You see it starts with 4, it means it's a cost and it affects equity. And it's debited for 75 euros, meaning because equity is on the credit side, on the right side, and because we put it on the left side, equity will decrease. And that's exactly the effect that costs have on equity. The second line is the investment itself. It has decreased in value. The asset has decreased in value. So the investment will be credited for 75 euros, meaning that the value of this investment will decrease with this amount. If you only book this once a year, of course, you can just use the 900 euros that you calculated as an annual depreciation. Then at a certain point, after a few years, you might want to know what is the value of my investment at this point in time. And then you will have to you have to calculate your investment payment, your purchase payment, with subtracting all the depreciation until that point in time. And you do it like this. You start with your purchase on July 1st in this example, 2020. Meaning the value at that point was 4,000, but the depreciation until the end of the year, after 6 months, will be 6 times 75, so it will be 450 euros. Subtracting this from this 4,000, meaning that the book value at the end of the first year will be 3,550 euros. So the purchase value minus the depreciation of 6 months. If you want to know it like 1 year later, you will have to subtract a whole year of depreciation, being 900 euros, and then you end up with a book value like 1.5 years after purchase, on December 31st of 2021, for the amount of 2,650. So this is how you calculate book value during time for this investment that you did. And at a certain point you will end on this after 4 years it will be a value of 400 euros, and then it can be like sold, or you can make other decisions, but at least then it's the ending of your booking cycles about this investment. Okay, so to summarize, investments are not costs immediately. They will create costs in the future, but the costs are like separated through in time for the period you use these investments. So it's not all cost all at once, but it's kind of divided in time. And depreciation is the name of the cost that it will create. Every month or every booking period, maybe just a year, you will have to depreciate your investment according to the calculations that we made. Good, so far about investments. Next part we're going to talk about income tax. See you at the other side.